Hey friends, Leigh Brown here with One Community Real Estate, and welcome back to Real Estate from the Rooftops, where I'm doing my best to bring you some information and some explainers about things that are happening in and around real estate, which may be incredibly boring to you, but housing policy is incredibly crazy, day to day, in the trenches, at your mailbox level, important. And so just remember that as you're watching the news, a lot of this not sexy stuff is happening and it impacts you, your house, and if you're a realtor, your business. So there was a big announcement last week that the Federal Housing and Finance Agency was changing the conforming loan limits for 2021. Now, some of you just heard me go, wah, 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 but dial back in here because there's some really important impacts from the change to the conforming loan limits. Now, as you guys know, housing in the U.S. has gotten pretty expensive. We have a situation where we have really great low interest rates, but prices are being driven up because we have increased demand and there's just not enough supply, which we can talk about in a future episode because I have lots of opinions as to why our supply chain is a mess in the real estate side. But in the meantime, let's talk about what you need to do to get this house. So when the loan limits increase, that basically means you can buy more house with your reasonable down payment amounts and the loan be backed by the Federal Housing Finance Agency guidelines, which would mean Fannie Mae and Freddie Mac. Now, you've heard about the GSEs a lot. We'll talk about them in addition, but right now I want to talk about the change to the loan limits. So when we increase the loan limits, the new number, and I have to look because I didn't memorize it, I'll just be honest with you. The new maximum conforming loan limit for a single unit property is $548,250. Now the number this year was $510,400, so that's a pretty significant increase. Now what that means to you is that you can now do a 5% down payment on a purchase up to $577,100. So you can spend a little more and still do 5% down. So I should add here a giant red alert. Though some of y'all still think you need 20% down to buy a house. That's not true. Now, when you have 20% down, you do avoid paying private mortgage insurance, but you don't have to have 20% down. There are amazing loan options at 5% down. So you should talk to your realtor and talk to the loan professional that's recommended by your realtor to help you understand the differences. And by the way, I'm getting a lot of my inside scoop from one of my preferred lenders, who is Brian Floyd with Fairway Mortgage. The reason I want my clients to talk to him or to one of my other preferred lenders is that, y'all, if you go to a website and start clicking, you're not going to get personalized advice and good pros and cons. And that's why I have really great pros with me. And most realtors have an amazing list. All right. So when we look at the difference between conforming loans, so that's now up to $577,100 with 5% down, or that actual conforming number, you're also going to have jumbo loans. Jumbo loans are bigger than the conforming number, but the pricing changes. And so you'll have a different pricing number with your lender between these two kinds of loans. Now, jumbo loans are the ones that are for more than the conforming amount. Qualifying is harder for those loans. That's for your big luxury homes if you're not putting a whole big bucket of money into it. You typically need a higher credit score for jumbo loans, and that's going to tend to be 720 or up. And so if you are a 660 credit score, you can do the 5% down conventional, but as you can see, your loan limits might wind up a little lower. If you're trying to do a big jumbo loan, you need a higher credit score. Why is that? Well, the banks have more at risk when there's a larger loan at play. Now, a jumbo loan tends to need 20% down. There are some 10% down jumbos. There are also some 0% down doctor loans. There are always going to be some interesting niche products, but you're going to need reserves. You're going to need to have great income. You're going to need to have a good information piece from your employer. We call that the verification of income or the verification of employment, VOE. And underwriting can take a little longer because they got to check. Why does all this matter? Because, y'all, during the big recession, we had a lot of loans go bad. I don't want our banks to go under, so they've got to make sure they've got good credit risk people, especially when you're in jumbo territory, big loan territory. Now, there are these old, we called them the sandwich loans. We called them stacker loans. They had lots of different names, combo loans, 90-10-10, 80-10-10, the 80-20s, all these different types of loans. But there's also going to be adjustments on pricing. And then there's second underwriting because you've got a home equity line of credit. There's 2 mortgages. Again, it's kind of convoluted and wild. You've got to have a loan professional that you trust, especially somebody local who might know your house and your neighborhood. Now, there's another little tiny piece of this that's coming soon, and we haven't had the announcement yet, but it's expected to show up. Typically, the FHA limits, that's the Federal Housing Agency. The FHA loan limits are likely going to increase as well because they tend to track along with this. And the new number should be 356, 362. So here's what that means. When you're doing your FHA loan, that's 3.5% down. Your credit score can be a little bit lower and you can have a little bit higher debt to income ratio, which means you have more opportunities as a buyer if something in your past has caused a couple of hiccups. And by the way, if your credit score took a ding at some point, most of us know that's not a personal reflection on you. Things like divorce, job change, medical bills, all kinds of things can impact your credit score. And if you want it to get better, you should reach out to your realtor or to our lender partners because we're glad to give you some advice to help you change that so you can change your whole financial outcome. But the announcement for FHA should come in December. Now, there's something you should know about FHA loans. And this I'm going to direct to my realtor friends out there. Y'all, FHA loans are not of the devil, okay? So a lot of realtors, when they get an offer for a listing for an FHA loan, are immediately turning it down because there is this perception that FHA loans are more difficult. What you should know is that somebody getting an FHA loan is going to have an extra inspection because it's a lower down payment, bank has more at risk. So there could be some non-negotiable repairs with an FHA loan. Now, what the FHA folks are looking for, at least in my market, and this could change based on where you are, they want to know there's not peeling paint on a house. They're very concerned about lead-based paint. They want to know that the windows operate. They want, good egress from the house. They want a handrail if you have 3 steps or more, which is kind of hilarious because a lot of sellers make this little jerry-rigged 2x4 version to get past the FHA inspector. But those are the kinds of things that FHA is going to be looking for because they want the house to be able to be lived in safely. So if you have a house that was built 4 years ago and it's vinyl siding and on a slab, you're probably going to be fine for FHA. But some agents seem to have forgotten that FHA offers are okay on houses and they serve an important part of the marketplace. So if you are a buyer, you should be excited. You're going to have more loan options at a different price point going into 2021. If you're a realtor, you should be excited because this also helps your buyer pool. Most importantly, this just emphasizes that you need a great relationship with a great, smart local lender who can keep you up to speed on what things mean, like changes to conforming loan limits. If you have more questions about things like this, tune back in. We're going to talk next about FHA and GSEs. We'll talk about some of this really boring, unsexy policy stuff here on Real Estate from the Rooftops, because when there's information you need a place to get it. Subscribe, give me 5 stars. I'll see you next time.